Here is introducing the Global Business Report. A sudden spike in oil prices has sent pressures through global markets today after reports confirmed an Israeli airstrikes on Iranian territory. This move has intensified fears of a broader conflict, threatening energy supply routes and sparkling volatility across commodities and equities as investors brace for potential geopolitical fallout. The business world is watching closely to gauge their impact on inflation, trade, and global economic stability. Now let's begin while we expand this in full detail. I am Oyi Okbala. Let's begin. Global oil prices soared on Friday following reports that Israel launched a military strike on Iran, a significant escalation in tensions between the two regional powers that has rattled financial markets and raised fears of a broader Middle East conflict. The price of Brent crude, the international benchmark, surged more than 10% in early trading, hitting its highest level since January before paring some of those gains later in the day. The sharp spike underscored investors' concern that military confrontation could disrupt oil supplies from one of the world's most important energy producing nations. The move by Israel comes amid heightened hostilities in the nations, with analysts warning that any sustained conflict involving Iran could have major implications for global energy flows. Iran is a key member of OPEC and one of the world's top oil producers. Its strategic positions near the Strait of Hormuz, a vital shipping lane through which around 20% of the world's oil passes, add to the market sensitivity. Even the risk of disruption in the strait sends immediate shockwaves through energy markets. The price surge follows several months of relative stability in oil markets where prices had hovered in a modest range amid mixed signals about global demands and production levels. The sudden jump in oil prices threatens to reignite inflationary pressures worldwide. Higher crude prices typically translate into more expensive gasoline, increased transportation costs, and rising prices for goods and services that depend on fuel, including food. Economists say the price shock could complicate policy decisions for central banks, many of which were cautiously moving towards interest rates cut after years of aggressive hikes. If oil remains elevated, central banks may have to delay easing plans or even consider further tightening. This was said by an economist with a leading global investment bank. This could put additional strain on already fragile post-pandemic recoveries. The Israeli strike on Iran has also triggered fresh diplomatic concerns, with major powers including the United States, China, and Russia monitoring the situation closely. The US, a close ally of Israel and longtime adversary of Iran, may face increased pressure to respond or intervene to prevent a broader war. European nations, many of which rely on Middle Eastern energy, are also brazen for potential economic fallout and renewed instability in the nations. All traders and analysts remain on high alert, with many warning that prices could climb further if tensions escalate or if retaliatory attacks against oil infrastructure or critical shipping routes. OPEC and other oil producing nations may come under pressure to increase output in a bid to cool market, though capacity constraints limit how much can be done in the short term. But then strategic petroleum reserves may also be tapped if prices continues to surge. As the situation develops, markets will be watching closely for signs of either de-escalation or further military action, but of which could have swift and dramatic impact on the global energy landscape. But that's not all. In China has proposed granting duty-free access to its vast domestic markets for exports from all African countries. Well, this happened yesterday, June 13, 2025, in a landmark move set to reshape global trade dynamics and deepen economic ties with the African continent. The initiative, if agreed upon by both sides, was unveiled as foreign ministers from across Africa gathered in central China this week to review progress made since the 2024 Forum on China-Africa Cooperation (FOCAC) held last September. The high-level gathering, officially titled the Ministerial Meeting of Coordinators on the Implementation of FOCAC Follow-up Action, is taking place in Changsha, Henan Province, and focuses on translating FOCAC continent into tangible results. Will that be possible? Well, Chinese President Xi Jinping, in a congratulatory message to the ministers, called the proposed measure a key part of China's vision for shared development and a stronger economic partnership between the two regions. This initiative will not only provide greater market access for Africa's exports, especially from the least developed countries, but also inject new momentum into China-Africa economic relationship. President Xi said it reflects China's long-standing commitment to supporting Africa's development and promoting South-South cooperation. But then, if implemented, the duty-free trade scheme would eliminate tariffs on a broad range of African goods entering Chinese markets, which represents one of the largest consumer bases in the world. The proposal is expected to significantly benefit African producers, particularly in agriculture, manufacturing, and raw materials, by improving exports competitiveness and enabling greater integration into global value chain. On the other end, African ministers welcomed the announcement, describing it as a game changer for economic diversification and industrialization on the continent. This is a critical step towards correcting global trade imbalances and ensuring that Africa's development is driven by trade, not just aid. Well, this was said by Naledi Pandor, South Africa's Minister of International Relations and Cooperation. China has already emerged as Africa's largest trading partner, with a total bilateral trade reaching over $300 billion in 2024. However, African countries often face trade deficits and struggle to compete in international markets due to tariffs and non-tariff barriers. The proposed duty-free access could be a transformative policy in addressing these challenges. While the Changsha meeting also revealed the FOCAC commitments, including infrastructure development, green energy cooperation, digital innovation, youth capacity building programs. Well, ministers understood the importance of delivering on these promises in ways that aligns with the African Union's Agenda of 2063 and the United Nations Sustainable Development Goals. And so, as this goes on, both Chinese and African officials, they have expressed optimism that the proposed trade facilitation and the measure would be finalized soon. And so the duty-free access proposal now enters a stage of bilateral consultations, technical assessment, and negotiations over product list timeliness and implementation mechanism. This is not about the trade. noted by Fakei Mohammed, who is the chairperson of the African Union Commission. He said it's about new model of international partnership, one based on mutual respect, shared interest, and a commitment to inclusive development. The China-Africa Economic Partnership for Shared Development signals a potential new era of cooperation anchored not only in investment and infrastructure, but in fairer trade and stronger economic sovereignty for Africa. But before we go, let's see what's happening in Rwanda from the other African scene. Africa, Rwanda, has officially withdrawn from the Economic Community of Central African States, the ECCAS, while ending 16 years of membership in the regional bloc. The decision announced by Rwandan governor and government on the 8th of June follows mounting political tensions within the ECAS and highlights the organization's ongoing struggles with regional cohesion and limited economic integration. Just for background studies, this was founded in 1983. ICAS aims to promote regional economic cooperation and integration amongst its 11 member states. However, analysts have long pointed to its limited effectiveness with intra-regional trade and joint development initiative lagging behind similar African blocs. Rwanda's ex raising questions about the bloc's unity and its ability to mediate regional disputes, but Rwanda, the withdrawal, may also signal a pivot towards strengthening ties with alternative regional platforms, such as the East African Community EC, in which it remains an active member. Well, this is the point where we'll just take a pause from the Global Business Report because we need to know so much about our roots. So this is me handing over to Star Smart to take you back to your roots.